All right, good morning, everybody. We still have FOMC this week. Got data out of Europe still this week. Markets are up for the most part. China ADRs, Bitcoin, yields. We do have the 30-year bond today. And tonight we're going to get data out of Japan. It's worth keeping our eye on that. Really think about what you're going to swing as we near the end of the day, knowing we've got data out of Japan overnight. So we'll deal with Europe tomorrow morning. Then we have FOMC later in the day. The ADRs are going to be a little bit fun today. Remember the S&P, when it comes to the ES, we get them at midnight. But when it comes to SPY and SPX, they don't have their levels yet. So their levels will come into play once the market opens at 9:30. That's going to give us a little bit of guidance on the ES and the NASDAQ because you'll be able to look at the QQQ to get a feel for the NASDAQ, which also, if you look at the NQ, it's already blown through those ADR levels. So at this point, generally, we look at those ADRs and consider, if we get past the yellow, then we would take, the whole range and project that to the upside one more time. Well, we're through that as well. All right. So when it comes to technical analysis, one thing you'll learn over the years is it works when markets are behaving and doing what they generally do. That's the whole idea of technical analysis. Looking at a typical market move and then projecting and anticipating what we're going to see next. When they start behaving irrationally, technical analysis doesn't apply. It doesn't work. It doesn't fit. It doesn't match. This is a little out of proportion. We're up 2.25% this morning. So all of the typical levels, structure, measured moves, all of that is out of whack, wouldn't fit. There is a concept of too far, too fast, but markets can stay irrational longer than you can stay solvent. I don't know if you've heard that phrase before. It's not mine. I didn't make it up. But the idea would be don't try to stand in front of this freight train and short it. As long as it's still running with this much momentum and gusto, then go with the flow or get out of the way. Same thing with the CPR levels, the floor pivot. Today's floor pivot is inside the week's floor pivot. They're almost touching each other. It opened higher than yesterday's floor pivot. That's considered bullish. Price opened above both, which is also considered bullish. And we do have to consider the S&R levels. So every floor pivot, whether it's a daily floor pivot or a weekly, we have the S&R levels to it. Now, if the S&R levels are really narrow, it doesn't do us a lot of good to try to anticipate what's going to happen if we get to one of them, right? And I just added more days here so we could get a little perspective. There are times when these days are really narrow. Right in here, for an example, all the lines are pretty close. And then here, where it starts to get really wide, I don't even have the top red line up there. It's a much wider range, right? It's kind of the idea. So when the range is really wide, just getting to an R1 or an S1, it's a pretty big deal because it's a really wide range. But when everything is really narrow, when these ranges are compressed, say like yesterday's range, it's a much more narrow structure. It's a lot easier to get to the edge. Should make sense. We're up 2.25% this morning, and we're still not yet at the R3 level. It's possible that we can get through there. Price can do whatever it wants, but I would really watch that level. 1, get to it. 2, get through it. And 3, see if we can pull back against it like a Busby and see if it acts as a support level. One step at a time, right? First, we've got to get there. Or looking to go the other direction, I don't think you have a really good short opportunity until you get back below the R2. And if you've done any sort of pivot strategies, you'll recognize that concept, right? All right, this is a lowercase b profile. Everything is down here. At this point, it needs to start building some structure up here. It wouldn't hurt to look for any sort of blow off top pattern, topping pattern, rounding pattern, anything that says we're done, all right? But if we continue to set up with new highs, again, I wouldn't try to short this thing or get in front of it. Roll with what you've got until it finally starts to change. We're not yet at the call wall. That's at 60.30. And we are a long ways away from anything else. The 10, the 20, the 3-week, 10-week, volatility trigger, zero gamma, everything else is behind us. And quite a distance behind us, really. The only thing even remotely close to us is VWAP. We have an extraordinary amount of volume today. I can't remember ever seeing it look like this, ever. Typically, we get somewhere between 45 and 85. Every once in a while, something really wild happens and we get 100. We're sitting at 275 this morning. So this isn't hedging. This is participation. So again, definitely don't want to stand in front of that. Just to kind of give you a feel on the level of volume here compared to what we're dealing with this morning, right? So I wouldn't fight that. My open interest. Keep your eye on the open interest today. See if it starts to run back in the other direction. Say like back here when we were mid-contract and we started getting that run back up. This isn't reflecting today's activity, right? So we're still getting that decline, but we're going to be looking for this to turn back up through the day today. It's the open interest on the futures. 10-day, 30-minute volume profile. We're through everything, working on some new structure up here. It wouldn't be surprising if, say, in a week or so, we come back down and retest this 58.77 area. For right now, that is behind us, even leaving that little bit of structure behind. And it is worth noting, we Busby'd off of that, right? So, Busby, the idea is you fight against a resistance level. And then when you finally get through it, very often you'll see price pull back and validate old resistance as new support. Some of the best trends that's ever kicked off in history started with something like a Busby. Even intraday moves with intraday trends often start off with a Busby. So it's a good confirming signal to see price work its way through a resistance level and then pull back against it, check it for support. If this was just a flash in the pan, a blow off top, and collapsed with mean reversion back down, if that was the plan, we wouldn't have all of these pausing structures. All of this is really healthy. What would be more unhealthy looking is if it was just a profile that went nearly straight up and then had that structure up here. That would be concerning. And then we'd have to be much more worried about it all falling right back down again. But this paused and developed structure on the way up. That's going to really help it. If it starts to get weak and fade, it'll be able to pause and regain support, momentum, structure on the way back down, which can help it stop itself from going all the way back down. There's a VPOC line that we wiped out, 58.78. We're just going to take that and set it down here because we do have one from yesterday now. At some point, we'll come back down and we'll hit this VPOC line. It could be, 1 day from now. It could be 1 month from now, 1 quarter from now. Who knows? We'll leave that line in place till we get back down there and hit it. There is a discrepancy right now between the TPO, that's the point of control on the TPO, and the volume profile and the point of control on the volume profile. These two are normally in sync. Now, we're working on that structure. We're likely to see this move up soon. It just hasn't moved there yet. TPO is time, price, opportunity. Often we just say that's volume by time, whereas the volume profile is volume by price. We want to see those line up. Another way you can think of it is the volume profile is actually showing you volume and the TPO is showing you trades. So we've had a lot of volume against this high, but not as much trades yet, which implies the trades that we did get had a lot of volume in it. 58.78 today is going to be a key level if we do continue that pause here and fade back. We'll see if we're able to find support there and hold structure, or if we break down even more. We are 1.8% above the 10-day moving average. So when we think about having moved too far, too fast, and being overbought, This says we've got room to go. If I just stop my mouse at the top of this bar, you can see there's been plenty of times where we've gone higher than this. We've been farther away from the 10-day than this. 2.5, 3. So we're only 1.9. We have room to go. But this is starting to get into a little bit of concern. Just remember what I said. Don't try to short this thing just because. This is showing record levels of participation that I've never seen before. On Monday, I drew new levels because I really think that the weekly profile is broken. We're through the levels that I had drawn 59.11 cog line taken out, 59.32, and that's also a cog line done. We got a round number 59.50, which is what we're fighting with now. And then above that, we have 59.52 cog line. 59.92, excuse me. Looking at the distance from the 10-week, we are 2.8% above the 10-week. We've been higher than that plenty of times. So on the weekly time frame, we're not even close to being overbought. Got plenty of room that we can travel still to the upside. If I just stop my mouse there, you can see we've been above it many times before, higher than this. The 10-week really isn't the concern right now. It's that 10-day. We got to be careful not to get too far away from the 10-day for a number of reasons, but one of them is we're going to turn that 10-day sharply higher, right? If you just visualize that 10-day moving average, we don't want it to point too sharply to the upside. There's a method to the madness, right? If the 10-day starts to point straight up, it's going to break a lot of things for a while. How long is it going to take, before it normalizes, flattens back out, starts to act with a normal curve again? Mess a lot of things up. All right, so there's a couple of ways to do this morning. Measuring yesterday's range isn't going to do any good. All right, you really want to focus on what we have from the Globex. So mark all of that out. Your best bet is just to take it high to low. That gives you the half back and then the breakout levels above. Once we get into the RTH, as I'm sure most of you have seen in my posts on an intraday basis, within, say, 30 minutes or so, we'll just be using the drawings from within the regular trading hours. We won't be worried about these structures that we've got from Globex. But we definitely don't have to worry about anything like yesterday's price, last week's price, anything like that. Not at this point. So focus on what we have from Globex. Spot Gamma still hasn't come out with their founder's note yet either. So the VIX is down a lot. I highlighted it so you'd be able to see it easily. Getting back down below 20 is a big deal. getting below 15 will be even more of a big deal. That's a low volume bullish environment underneath the 15. It's a really big deal. But this is a little bit of a concern, right? And that move in bonds with the 30-year today, I'd pay particular attention to the auctions as they come up. Solar's down, bonds, China ADRs, gold miners, all down. Flip it around and look at things that are up. Banks, Bitcoin, financials again. Although when we say banks and we say financials, you know, the XLF, it's got trading firms in it, insurance, lots of other stuff than just banks. But both of those groups are up. Airlines, oil and gas, metals and mining, industrials. Every single group and ETF is up more than 0.5%, except nat gas and staples. But even those are up. They're just not hitting our benchmark yet. This is that rising tide scenario that we've talked about before, right? It's always nice to have something like the Mag 7 turn us into a trend day, and along the way, catching a couple of sectors like consumer discretionary and technology and having those come with us. But what's better is when you have every single thing out there all doing the same thing. It's a highly correlated market structure, and it could activate something like the alpha protocols. So that's my approach to trading like the algos do. If they can trade a basket, why can't we? Something you're going to want to watch for today is if that rising tide starts to change. The problem is, depending on what you're using for an ADR line, you might be, it's a little disingenuous. So the idea is right now we're looking at the NASDAQ 100 advanced decline, and it's set to 0 because the market's not open. When it opens, if your advanced decline is looking at where we closed yesterday and whether or not we're above it, then all of these are going to be up, and it'll say advancing, even if they fall for the rest of the day, as long as they don't fall under yesterday's close. Well, that's a little disingenuous. But if your advanced decline starts tracking things from where it opens today and whether or not it's still above its open or not, to distinguish if something is advancing and declining, then you've got a more accurate advanced decline line. If we're up 2.25, 2.3%, we could fall for the rest of the day and it would still be bullish. It would still be positive until we get back down to where we started last night. So that's the idea of these advanced decline lines. They're not going to be useful today. You're going to want to go in and check your groups individually. How are they looking? Check things like the Mag 7 group, NY Fang, KRE. Look at things like XLK. Visually check on them and see what they're doing, because these advanced decline lines, they're not going to be helpful. Seven percent of the S&P is down 0.5% or more. FedEx, UPS, so shipping, Meta, Lowe's, but really a lot of shipping. Southern Company, FedEx, UPS. All right. For the NASDAQ, 8% of the NASDAQ is down 0.5%. China ADR, the PDD, and then of course SMCI, things a dog. Dollar Tree, but 81% of the S&P is up 0.5% or more. That's a very bullish. So if you're going to try to short this thing, I would give it a lot of time at the very least. My recommendation is don't try it until you've got very clear and convincing reasons to short it. 75% of the S&P of the NASDAQ is up 0.5% or more. It doesn't get more bullish than that, right? It's a highly correlated market state. So unless everything flips and dumps all at once, there's going to be a lot of competing interests here. Bonds are going to be a big deal. We got that really big move in the dollar, a big move in the VIX, and we've got the 30-year bond today at 1 o'clock. So keep your eyes on the clock. Flip through the charts. Don't trust the advanced decline lines today. Be careful. Be safe. I'll see y'all tomorrow.